everybody. Welcome to the Stock Market Morning Prep video for Tuesday, May 13th. Well, we did get that move that we were looking for, a move higher yesterday, and we also hit new highs on the S&P and the transports. The Dow Jones now has made new highs, and the only two that are lagging is, of course, our other two leaders, the Qs and the Russell. Again, market divergence is upon us, but let's see if this market, the other three indices, can grab the other two and pull it up with it. Now, again, crazy market, guys. You have to be aware of your surroundings, what's happening around you, and I do suspect that we can now take the highs and challenge that extension at that 1914, 1917 area, and I'll show that to you in the charts. Few things are starting to look interesting, and remember, we really haven't had any movement for the last 2 to 3 weeks. We've really been range bound, about a 20 handle range, where a lot of the stocks and indexes, ETFs, really weren't doing too much, just selective handfuls. So I want to start looking at a couple of sectors which I want to talk to you about, which will be the home construction, which would be, of course, the builders. Lumber is starting to move up. That usually brings the home construction industry up along with it, showing demand. We also have some of the regional banks starting to look good. I'm starting to like solar again. And believe it or not, steel is looking really good, the SLX index, and I'll show that to you as well. And then biotech, the unloved sector for the last couple of months, is starting to look pretty good as well. So we need to have patience. We need to take a step back, and when things are starting to move again, then we can start really getting in and dialing down into that sector and really start taking on some really good trades. Yesterday was a clear example. If you weren't long, you really didn't do anything yesterday, because if you wait the 15-minute rule, you're already now into 10 o'clock, and we were already into the sideways channel. We did nothing all day until the end of the day. The last hour, the market just grinded higher, really on no volume here. As you can see, volume picked up for short covering rally, and that was pretty much it. So let's see what happens on Tuesday. Today, we do have the markets liking the Tuesdays. The Tuesday turnaround effect. So let's see if we get another positive Tuesday. I think this has been, oh gosh, I don't remember the stats, but don't hold me to it. I think it was like 30 Tuesdays we had positive out of like 50, I think it was. I'm not sure. I got to look if I can locate the stats again, but crazy stuff. It doesn't matter what I think is what the markets are doing, and we are continually moving higher here yesterday, and as you can see, and that's what happens. You know, you get a big gap up, we don't get a pullback, and the markets just continue to grind, and then pretty much most of the day. It was a very subdued and quiet day yesterday. Again, not giving us that pullback that we're looking for to get a proper entry in, okay? But it's interesting here, because the markets are very vulnerable at these areas, at these levels. We have the VIX at all-time lows now, basically, well, at its lows, excuse me, at its lows at around 12, and it looks like we might be breaking down from this Bollinger Band. We need to keep an eye on this, because when the VIX breaks lower, you'll have a big spike up in equities, but you have to understand there's a large number of complacency here, and I want to show that to you as well. And you can see that in the put-call ratio, spiking down to 64. That's extreme complacency. So if you're a contrarian, this is a big warning sign for you. And I like looking at this every once in a while to see where this put-call ratio is. There's extreme complacency out there. So all it needs is one risk event to happen, and the markets start to get nutty again. So remember, just a word of caution. Do as you wish, but I still think that the markets are going to give us a big surprise here. Remember, the markets are made to fool the masses. So if we get up there and challenge, that doesn't mean that we can't trade long, right? Obviously, we just need to be aware and be careful. Say, okay, I don't want to take on too much risk here. And this has been basically the theme pretty much all of 2014 so far, the last 5 months of trading. You know, markets run up, then they obviously collapse for 2 or 3 days. They run up 7 days. They come back in again. So it's a nutty market at the moment. So if you can be selective until this market can realign itself, then I think you're better off. And I'll show that to you in the charts here. Okay, couple things. I like the silver, and if you want, dial into that silver ETF. Look for the holdings and grab the top 3 charts here. Great chart. big breakout. One stands out is AK Steel. A nice big breakout. If you looked at the chart, you'd see what I'm talking about. IBB is the biotech index. If you look at the biotech index and the IBB, you would see that that we have starting to hold the 200. So it'll be interesting to see. It'll be interesting to see where the sector goes. But again, it is still has a bearish pattern, but looking a little bit more interesting. Also, some of the banks, and I do like the solos. They're starting to pick up a little bit of steam. So keep an eye on it. See where. Let's see where this sector starts to take us. And if we still get a risk-on type environment, then I would definitely look for that. Now, the home builders. I have lumber overlaid over the ITB. This is the ETF, the U.S. Home Construction Index, which, excuse me, it's not an index, it's an ETF. It's compiled of, the Home Depots, the Lowe's, the builders, and, of course, some suppliers. So lumber's starting to take shape here. You can see that we're starting to get a little bit of movement from yesterday from the lumber. So I'm going to watch the home builders. Now, again, they all have bearish patterns, remember. So if anything, it would be counter-trend for now. But they are coming into some seasonal time of strength as well, coming into the spring months. So that might be a good play in the next week to 2 to 3 weeks. So we'll just keep an eye on that. But I'm watching several sectors right now that we can get involved in. Okay. All right. So let's go right into ES. ES again made new all-time highs in the pre-market, 1896.50. I'm looking for that extension of 1918-ish, right in that area. As you can see, this is the 1618 now. We've already taken that 1272 already out yesterday. So I am looking for that. And let's see, we're not that far away. We're only, less than about 20 points away here. So not that far away, very easy to get to. You need 2 or 3 big days, and then we'll hit that target. And remember, there's a lot of longs up here. And I'm not trying to be a bear, because I'm not. I could care less the market goes up or down. But what the analysis tells me to be careful when we have these market divergence, these warning signs, you got to trade accordingly. And that doesn't mean that we can't buy stocks up to there, but I'm just not holding anything because I'm looking for, waking up one morning and then markets are down 20, 30 handles. Just not in the mood to handle that type of stress. Anyway, okay. Hourly chart 1272 is broken nicely, and now we are looking at the extension of the 1918 area. Okay, that's going to be the next target, guys, and it looks like it may get there. Dow Jones Industrial Average, new all-time highs yet again, 16,704.84. So making new all-time highs, but look what's happening. Well below average volume, but again, price is what pays us. So unfortunately, volume is not confirming what price is doing. Look at the transports volume yesterday. Terrible price action, but yet made new highs yet again. So transports is our leader, and it doesn't matter what the other indices are doing. If it's moving higher, so is the transports. Russell did have an explosive move to the upside. Caught the 200 again, the SMA this time, and now is back into this area of resistance. Okay, so let's see what happens with the Russell. Still quite bearish, obviously, but let's see if we can get enough steam to break above this big horizontal resistance area. Okay, if we can get back above there, then we might be able to start rallying here on the Russell. So, and Russell is due for a bounce, as you can see. It really has gotten crushed here. Okay, so Russell looking okay. And then lastly is the Qs. You can see the Qs here did break out of this downtrend line, and now is testing resistance. If it get back above 84.35, then I think the Russell could, the Qs more than a Russell could definitely play catch up. Okay, so watch the indices, and let's look at some of these sectors for some good trades here. They're really starting to look good. There's a lot of trades setting up. I'm not putting them out there. I just don't want. I want to get the confirmation from the market. If we're headed higher, and then we could start buying some of these other beaten down sectors, which would give us a better entry because they're not overvalued like some of the other sectors are, or at least were. Okay. Have a great day, everybody, and we'll speak to you tomorrow. Take care.